All right, it wasn't just the big banks, who received TARP money. Regional banks received some too. My next guest heads one of them, Gerald Lipkin. Jerry Lipkin, he is the chairman and the CEO of Valley National Bancorp. Jerry, good to have you with us. Thanks so much for coming in.
Well, thank you for having us.
Before we get to the whole issue of TARP funds, let's just talk a little bit about what's going on in the world of banking and business. Now, you're really focused on what's going on in the New York metropolitan region. You've got, what, like almost 200 branches and facilities. How's the health of the business?
It's actually pretty good. We are what's known as a plain vanilla spread bank. We lend a little bit different than some of our competition. We're lending our money, at least we take the philosophy at the bank, since the senior management and the board of directors own such a large portion of the bank, that when we make a loan, it's our money. So we tend to be a little bit more conservative because we want to make sure that we get back our principal, remembering it's the return of the principal, not the return on the principal. That's number one. So we focus on that. Asset quality at our bank hasn't had the deterioration that we've seen and heard about on TV around the nation. Our bank avoided the subprime residential mortgage market entirely. We thought it was a foolish loan for anybody to make. You're going to lend somebody with a poor history of paying their debts on time more money than they have the capacity to repay on a piece of property that's probably not worth as much as you're lending them, and you don't think you're going to have a problem? But at Valley, since we're lending our money, we make sure we don't make that kind of a loan. As a result, with delinquencies in the country running over 9%, in residential mortgages, ours are running just a hair over 1%, 1.5%. So I think it's reflective of the type of lending we do.
Well, let's just talk about the loan portfolio, if we can. Talk about the commercial loan portfolio, for example. How's that doing?
Very well. Our delinquencies in our commercial real estate area are hovering around 1%. Which is a little bit higher than normal, but certainly not something that would create panic. Our delinquencies in our commercial C&I business runs just about the same, hair higher, depends upon which month we're looking at it. And when we do have loans that unfortunately get into trouble, we generally get most of, if not all, of our principal back, because when we lend people money, we make sure they have skin in the game.
You go for personal guarantees a lot of the time,
almost
right?
all of our loans. We look for large down payments because a person should have equity in any project that they're taking on. And we look for personal guarantees because the bank makes a very small spread on the transaction. The borrower generally will make a very large spread on the transaction, and that's what they should be doing. But the person who's making the large rate of return should be the one who's taking on the risk, not the person with the very small return.
With the least amount of skin in the game. What about then? What is the situation with the Troubled Asset Relief Program with TARP? I mean, was that a situation where you kind of had to take the money?
It was not that you had to take it. It was why you took it. Number one, when it first came out, it was a brilliant program. I think Secretary Paulson at the time devised a brilliant program to help the economy in a number of ways. It was to pump additional liquidity into the banking system so that the banks could make more loans. Very good. It was an insurance policy, and that's what we looked at it as primarily, that if the economy got any worse, and you have to remember in October of 2008 when we applied for it, and we were encouraged to take it by our regulator, it was a black hole facing the entire banking industry.
A different situation then.
Right. So, okay, this is an insurance policy. We'll take a little extra. And we really felt that the uncertainty justified it, and we were also told that it was only going to go to the good, strong banks. And it was going to go to us because they want to super capitalize the good banks so that we would be in a position to acquire those banks that were failing. So it was a third reason that we took the funds. It was only a couple months after we got into the program that everybody turned this thing from what I thought was a brilliant program into a scarlet letter.
All right, and now you're working to repay the TARP program.
That's correct.
You'll have to come back at a future time and give us more details. We'd love to have you spend more time. Jerry Lipkin coming in from Valley National Bank. Thank you very much for sharing some insight into the world of banking.
And thank you for having us.